Happy Easter, Bearable Traders. Before I get into this video, I want to discuss the Bearable Traders Challenge. This is the round 2 that we're doing here. So it starts on Monday, April 22nd. The first week is kind of a warm-up, a practice, where you can get familiar with DOS, learn how to operate the platform. And then week 2, starting April 29th, is the actual competition. So grand prize is Andrew's travel setup here, gaming laptop, some external screens, a hub, and a backpack provided by DAS Trader. So take a look at that. Now this time we're going to change the rules up a bit, just so no single trade, no runner can put anyone too far ahead. We're going to try to reward people who are consistent. So take a look at the point system we have going on there. Basically, if you finish in the top 10 for the day, you get a certain number of points. Whoever has the most points at the end of the week wins it. So no single runner, no single gamble on low float or penny stock can take away the competition. Anyways, if you're a student of the markets like me, passionate student, then you often probably think about the markets on holidays and weekends and stuff like that. And that's great, right? To be passionate about what you do. Now, on the flip side is you don't want to get compulsive or addictive or obsessed over these things, right? To be frank with you, there's similarities between gambling and day trading, right? There's the risk, the money aspect, the uncertainty, all this stuff. So just don't get crossed up in that. Now, one thing I used to do when I had more time, I used to watch market replays during my off hours so I can study these things. I'd take a look at trades I took, trades I didn't take, take a look at the charts, signals, confirmations, what I did right, what I did wrong, and just constantly trying to improve, right? Because if there's anything that's certain in this market, is that you haven't figured it out, right? I don't care who you are, I don't care how long you've been trading, I don't care how many private jets you own. The market always wins, and you always have room to improve, right? So that's my philosophy here. Now, this trade here on LYFT, I took it on Monday. I didn't do a recap on it, but I want to use it as a kind of a discussion opportunity, basically, right? LYFT sold off huge. Look at the daily chart. We know this thing IPO'd. It hit 87 or something, and it kind of just really fell apart, right? Fell apart, pulled up, fell apart, pulled up. This is like a bear flag type of deal in my mind. We had an all-time low here at 57.30, right? So on this day, it wasn't in play, but I had it on watch because it was going to crack. Now, let's actually just kind of rewind here. Let's slow it down. Let's slow it down to normal speed. Here, okay, 9:39. I want you guys to take a look at this chart, right? First thing you'll notice, I pressed play, right? It's barely moving. Look at the time and sales. It's barely moving. The markets, this is one realization I've come to, right? After watching all these market replays, doing all these no trade challenges, right? NTCs. When you don't have skin in the game, right? When there's no money on the line, when your adrenaline isn't pumping and all this stuff, the charts are turtle speed. It's moving at the speed of molasses, right? LYFT, this is kind of a little garbage stock, but even anything in play, these things tend to move not as fast as you think, right? At the open, the bell rings, your heart's racing, you're watching 8 screens, the chat room's going, candles pulsating, time and sales lighting up. You know, there's a psychological effect. Adrenaline makes it seem that things are flying by, but in reality, they're not. You have time to make decisions, guys. You have time to analyze the charts, to analyze your risk to reward, to analyze your share size, to look at the quality of the setup, right? It's the emotions and the psychology that make us do dumb things, like jumping the gun or not taking valid setups or whatever that may be, right? So this is a valid setup. Look at this approaching here. I took this trade, right? I took this trade. Let's take a quick look at my activity statement. I went short at 940.14, right? Which is basically approaching right now. And that's a late entry in my opinion. But I'm a breakout trader, right? You may have seen a lot of my recaps. I like to go short or long on new 2-minute or 5-minute highs and lows, and that's how I trade. Now, there's another type of trading in the room that's picking up popularity is support resistance trading, right? Pullback traders. And there's no right or wrong way. People see things differently, right? So this obviously is a bearish, right? Sell off, pull back, next leg, right? That's on the 1-minute chart. On the 5, it's a bear flag, right? On the 2, it's a sell off, consolidation, sell off, right? So whether you want to short on the pullback to the moving average, right? You're going to say it's going to reject that moving average. You put your stop above the VWAP. Or you're going to be a breakout guy like me and short it here. When it breaks out, breaks down, right? And you put your stop here. That's really up to you, right? And I'm not going to say one way is better than the other. Obviously, everyone has different styles, different risk tolerance, and whatever they're comfortable with. But this is one example of that. And this actually reminds me of in our mentorship program. We had a mentorship program where we took on some people and we worked as a group on how to improve our trading. But basically, one of the common themes that people had for their trading objective, what type of trader do you want to be, was the question. They said, I want to trade off the 5-minute chart. I want to take 5-minute setups, but I want to get entries off the 1, right? To get better entries. That was very common. That's fine and dandy. This is the perfect example of this. 5-minute setup, right? Rejection of the VWAP, entry off the 1 in this area, right? Clearly you enter somewhere here. This is a point, this is a gift. Everyone who went short here, right? This is coming back for 3 reasons. 1, shorts are covering, profit taking. 2, beginners are knife catching. They think this is a bottom, right? This is a fake out, it's a trick, it's a trap, right? And 3, averaging down. Everyone who's down from here on the daily chart, who knows, who went long pre-market, thought it was a good buy, who thought this was some sort of good buy here or something, they're averaging, right? And one way to find out if it's a reversal versus a pullback, right? This is a very common question. Look at the volume. The volume, right? It's non-existent. The bars are tiny. This is the direction of the trend. Do not try to counter trend this stuff. I told you guys many, many times, things move in waves, right? They move in waves. Sometimes you'll get pullbacks. And often beginners, they will go the opposite way. They will take long during here, and then they'll get stopped out. They'll take long during here and get stopped out, going counter trend. And then they'll look back on the day and say, you know, every trade I took just went against me. The market's out to get me. I should just do the inverse of what I do. That's because they don't understand the psychology and the price action, right? It took me a while to understand this stuff too, but basically a good example of a 5-minute setup, entry off the 1. This is perfect. This is so beautiful, so clean, right? Okay, so I actually took this trade. I took it at 940.14 and I tried to put a 2-to-1, stop here, enter here. I was trying to get to 57 and there after it lost the, I was hoping for it to lose the all-time low, right? And I figured a lot of stops would be here. People who took it long yesterday, the day before that, they're probably like, okay, you know, if it goes lower than it did yesterday, I really got to bail out of this thing, right? Anyone averaging down, stuff like that. So I thought that was going to be a pretty good move. This is obviously going to take a little time to go, so I'm going to go on 5x speed. The markets just move so slow, guys, really slow. This is 5x. Look how slow we're trickling. It ain't getting anywhere. And on that note, right, when you realize that, when you come to that conclusion, once you have the confidence to take your setups, but when you come to the conclusion the market is really not that as fast as you think it is, you're not going to panic. You're not going to panic on these little pullbacks, right? I can picture people, oh my God, it's coming back on me, it's going to reverse on me, coming out and just exiting here, right? And you're not going to feel the need to FOMO because you realize that sometimes the price will come back and give you a decent entry, right? There's second opportunities. You're not going to panic and just get out as soon as it comes back to break even because you realize it's going to take a while for it to get back to your stop, right? And you know, this is relative, right? Sometimes it'll take a minute or two if you are going to get stopped out, 2 to 3 minutes. But do you agree with me? Sometimes it feels like you don't even have time to put a stop order when you're just, you know, thinking out of fear or whatever, right? Okay, so let's discuss something while we wait for my target to hit. Commissions. Now, this is one thing that I used to fret over. I used to really, really think about. Now I don't even bother with this stuff because if you are trading correctly, trading properly, right, and taking proper setups and all that stuff, and you know, not over trading, commissions are negligible. I never share my P&L, never. But here, I made $348 on LYFT, right? My commissions were $3. That's 1%. That's nothing. That's like a penny. That's like me partialing or exiting a penny later, right? That's non-existent, right? And this is because I'm trading at a size where the commissions kind of scale up. Now, when you're first starting out, you're trading 100 shares, you're risking 25 per 1 R or whatever it may be. The commissions will add up, right? It's expensive because relative, it's a lot. You're gonna have to meet the minimum order, whether that's 50 cents, $1, whatever that is, right? That's why I'm telling you guys, forget about the commissions when you're first starting out. It's a cost of learning. It's part of the tuition, right? And then as you graduate, you get consistent, you increase share size, the commissions become a smaller and smaller percentage of each trade to the point where you don't even think about it anymore, right? Okay, so that's that, right? And then, okay, so here we are at, I think we cracked that low, and I took a partial there, and then we took another partial here, and then I think it touched 57, and then I was all out, right? Now, this is one of the reasons why I switched to the 2-to-1, the 2-to-1 all or nothing. You may have seen me mention that, or using a range order. I would put my stop here, I'd go long here, or sorry, I'd go short here, and then I was looking to get all out here. I looked back on this trade and I said, Robert, why are you so scared partialing along the way here, right? And you came out with a 1.5 to 1 when it was an easy 2-to-1. You knew it was going to be an easy 2-to-1. You saw the setup, right? You didn't have any belief. You got scared during the trade. Stop being, you know, trust the charts, right? Trust in your abilities. Trust the price action. Don't get scared. So I said, you know what? I'm going to try something new. I'm going to use range orders. I'm going for 2-to-1. Whatever happens, happens. Let's do it, right? And let's get on to the next trade. Okay, so SKX, Friday or Thursday. That was yesterday, right? This thing was in play. Let's run it on 5X here. This thing was a huge gap down, right? Huge gap down. Look at this, 15%. and there was obviously some area here. This was the 200 moving average. It didn't even come to test that. It just came back up to test this area, this pivot area, the support, 32 bucks. Basically, the open was kind of sloppy, really ugly. Let's kind of fast forward on here. Okay, so open really choppy. It really didn't know what it wanted to do. Then it reestablished the VWAP. Reestablished the VWAP and really pulled back. This is where I wish I'd taken it. I really wish I'd taken it. And even on 5x, guys. This is 5x speed. Look at the chart. Ain't nothing happening. Just really, really slow. So I'm just going to fast forward to the point where I wanted to take it. 946 it was. Sorry for the delay. Maybe I'll edit this out. Maybe I won't. Okay, 946. Here we go. Normal speed. Right. This was a day before holiday, so it is a little bit low volume, but still, I want you guys to see how slow the price action is. Right. So we got above the VWAP. Now it's really deciding what it wants to do. A lot of people would have bought it off the VWAP, right? On the support, again, support versus breakout. Some people could have bought it on the VWAP to put their stop here. That's a good entry, great entry. Keeps everything nice and tight, right? But one of the things, okay, so while we wait for this to set up, let's talk about this. One of the fears a lot of people have is they want to trade off the 1 minute chart because they want the best entry, right? They want to save, they want to reduce their risk. So they think to themselves, okay, I'm going to trade off the 1 minute chart. I am going to, I don't know, I'm going to go short here, right? This is a really good entry. I'm going to short here. And then because they're so focused, tunnel vision on the 1 minute chart, when it pulls back, a normal pullback, they get scared and chicken out and they're out, right? They take a small loss. And then they do it again, right? I get scared and chicken out. Now you realize when you trade off the 1 minute chart, you get good entries, but you have to be able to tolerate the normal gyrations of the market, right? Higher highs and higher lows don't mean too much on the 1 minute chart. They have more meaning on the 5 and the 15, and sometimes the 2, right? So understand that. And that's a paradox to me. You try to reduce your risk, right? You try to reduce your risk so you get in on the 1 minute chart where the movements are smaller, but you end up actually losing money because your mindset is operating out of fear again, right? So here comes the breakout. Look how slow it is. I don't know why I missed that. It was just so slow. 30-30 was the breakout point, and then once it broke the triangle, you guys know I've been talking about that stuff lately. Once it broke this high of the day triangle of, right, this 30-40 was obviously some sort of level off to the races. It was just gone, right? Missed that, right? So let's just fast forward this 1 bar per minute. Let's do that. Okay, so it runs up, right? There's opportunities to get back in. This thing's strong. It's cleared, it's broken up, and it's pushing. So people who are short biased, they're probably shorting here and just getting steamrolled, right? Shorting on these consolidation points, not understanding the larger picture that this thing can't even make a new 5 minute low, right? Trending up, super strong. I can honestly picture people shorting this, right? Okay, so let's get to a point here. Let's turn it down, normal speed at around 10. Actually, we can go 2x speed. Okay, so we break out of the triangle. What happens? Break out of the triangle. We go for 1 flag. Let's go for 2. 1 flag. Good. Second flag now forming. Good. Now we're on the 3rd flag, right? We're on the 3rd flag. And everyone who's shorting this stuff, not understanding that this is very strong trend, look how strong it is. When you see something trending up, a moving average trend trade, often it'll ride the MAs, right? So it'll ride the MAs on the 1. Wherever it touches, it'll catch support. People are buying the support. If it loses MAs on the 1, it'll try to catch support on the MAs at the 2. You see this? Right? And if it loses those, then it'll try to catch support on the 5. But this thing is so strong that look how the distance here, guys. It can't even pull back to the 5 because people are not letting that happen, right? On the smaller time frames, every time it touches, it's getting bought up. You see that? Bought up. That's what creates bull flags, right? And unfortunately, the people who are shorting this, they give fuel to the next leg up because they have to cover. Get me out of this trade at any price, right? They short on. They have to cover at the. They have to cover basically at a market order, and then off we go, right? So I can picture people shorting this the whole time and then just not getting it right. Right, so we get to 10:30. Let's just fast forward here. I started noticing some really interesting things. I started noticing, let's go 5x speed. 200 moving average is approaching on the 1 minute chart. On the 5 minute chart, you had a 50 moving average was approaching, right? And we are now on the 1, 2. We're starting to come up on the 3rd flag. I usually take the 1st and the 2nd, right? The third is really iffy to me. I usually don't take them. I try not to take them. Sometimes I'll FOMO, do dumb things, but this time I said it to a buddy of mine. I said I'm going to short SKX once it starts showing any sign of weakness at around the $32 area, right? Remember that daily chart, so some sort of area at 32, right? And here we go. We get an indecision. It bounced off the MA, got an indecision. What do you think the next candle is going to be? I'll spoil it for you here. Came out as a doji. Okay, I said I've seen enough, right? Now I'm going to use the power of inversion. So let's take a look at my entry here. SKX 10:35 and 38 seconds. 32 and a quarter was the entry. Actually, let's go back. Look at the commissions again, guys. $500. I paid $7 in commissions. That's a little bit over 1%, maybe 1.5%. Negligible. Don't think about it. Okay, so shorted it there. Boom, cracked. And why is that? Why did it crack so fast? Well, I feel using the power of inversion here, right? I'll put myself in the shoes of a buyer. Anyone who missed the boat, or who's on board, right? Okay, these guys who got this breakout, they have probably partialed, now hanging on for any sign to get out, right? Any new 5-minute low, they're waiting to get out. These guys here who took this flag, they've probably got their 2-to-1s in this area. And these guys here, they're just starting to get their 2-to-1s. Right? This third flag is a trap. It's a trap for anyone who does not see the bigger picture. That there is a 200, a very large moving average here. There's a double top has formed. There's a 50 moving average here, right? And they probably don't understand that the third flags don't have as much momentum. And this is hard to see a gap down, so people were just looking for any chance to short at people like me. And that's when I took it, right? Spinning top, shooting star, short. And it spent some time. It took time to get down, right? Look at the speed that we're on, 5x. And I was joking in the chat room. I said I'm short 32 and a quarter. I got my range order for 2-to-1. I'm going back to bed, and I might as well have, right? So as you can see in the trade log here, what did I end up doing? Now I ended up getting greedy. I saw how fast it was flushing, and I looked at the 15. And I said screw a 2-to-1. I am going to get to VWAP. That'll be like a 5-to-1. I'm going to kill it on this, right? And then it came down, hit this area. I took a partial, and then within 2 minutes, was it 2 minutes? Yeah, 46, 48. I said this is dumb. I'm getting the hell out. Stick to the plan, right? You plan the trade and you trade the plan. Don't start changing your mind partway through the trade. That's when all the stupid emotions and all this stuff comes into play, right? So I'm glad I did. I took a first profit, and then I just got the hell out of everything after that. And I really wish I'd just done 2-to-1. I would have done 2-to-1. I would have been out of the trade. That's it, right? Short, stop, 2-to-1. Done with it. Don't have to do anything else. All right, so this thing actually ended up continuing. Right now, the waves start going the other way. It went like this, right? This, and then it starts doing this, right? Coming back, and we'll probably just speed it up for that. But basically, yeah, that's the trade. You want to wait for signals before you try to short any tops. And I know I'm an advocate of the 15-minute chart. Obviously, this one wouldn't have given you a chance. If you try to short on a new 15-minute low, this is just straight engulfing, right? Bad risk to reward. But you know, there was still some valid trades actually on this. I remember actually when I was out of the trade, I said to myself, maybe I should get back in, because that's a good leg down. Right, it's going to consolidate. I know it's going to consolidate and hit the VWAP. If I were to take it somewhere in this area, put my stop above here, then the risk reward just wasn't there. Right? So that's basically the trade, using the power of inversion, trying to put yourself in the shoes of whoever's currently on board or people on the sidelines, and understanding that there's something about trading psychology that people want to short the tops and buy the bottoms. I don't know what it is, guys. We all just want to do it, want to get the best price. Maybe we FOMO because we missed this trade, we missed this run. So you know what I'm going to do? I'm going to try to short it. You know, I'm going to get the best price. I'm going to show this stock what's up, right? And you're just going to get blown away. Right? If you got tunnel vision, you're just trying to get revenge, you're going to you're just going to be on the wrong side of things, right? So ditch that psychology. You're not going to catch the whole move. You want to catch legs, right? You want to catch these legs as they show signs that they're going to break down. Okay, so LYFT, SKX, fear, greed, long rant. Have a good weekend. Hope everyone stays safe, and I'll see you in the room on Monday.